morning, everybody. Man, I jolly pies. I was on the phone with one of my brothers. Time then got away from me. I'm sitting up here eating cereal. We're going to get into it. Good morning, here you learn, Chef. We're going to get into it. But I'm going to turn my camera off. What's this doing? Oh, man. Yeah, hold on. This thing doing something crazy. Okay. Yeah, so what I'm going to do, we're going to get into it. I'm going to turn my camera off. Is anybody in here? Is this live? Is it live? Yeah, I see here Learning Chef made a comment, but she always cheating. Is there anybody in here? What is this thing doing? So this right here gonna be about how to avoid FOMO. Right, it's gonna be about how to avoid FOMO. And it's not gonna be okay, people in here. All right, I see it. I see y'all. So if y'all hear me smacking, I truly jolly pies. All right, I'm gonna put the charts up and I'm gonna turn my camera off and I'm gonna eat while I talk. What's up, Lil Hulk? Let's go through. What's up? Y'all drop something in the chat so I can shout y'all out. Hey, y'all drop some. Hold up. Y'all drop something in the chat so I can shout y'all out while I'm eating my cereal with the camera off. Y'all put something in the chat. Everybody start just come in, drop ones in the chat so I can see who in the chat and I can shout you out while I'm finished eating my cereal. Well, I see Hitler and Shell in the chat. Who else here? Candlesticks in the chat. Lil Hawk. This ain't gonna work out too good. This ain't gonna work out too good, cause this is gonna be crunching. Hey man, we family. Good morning, Seawalk. Y'all just gonna see me eating. Why we doing this? Now, my bad. Time got away from me. It was time to go live. So I did it. Anyway, how to avoid FOMO. This is what we're talking about today. How to avoid FOMO. Now, it ain't gonna be one of the ones what you think, you know what I'm saying? I'm gonna give you something all philosophical. That ain't what this is. And today's episode is sponsored by Michelle Tucker. This is being brought to you by Michelle Tucker. Because Michelle pulled up with a hard-hitting question last night. And the conversation we got into was all stemming from her about the FOMO. And why I say she was about the FOMO, because she was so worried that she had missed her opportunity and her opportunity hadn't even presented itself. So, can y'all hear me smacking loud? Is that smacking real loud? Let me back the mic up some. Is that smacking real? Is that better? Can y'all hear me smacking loud while I'm talking? So, how to avoid FOMO? For the note takers, these 1 hour candles, I'll let y'all watch 5-minute candles while we hey, this look good right here. This look good right here. Dig this. Okay. 60-minute chart. All right, 60-minute chart. We came down real close to this sell side, didn't take it. Right, push back up above midnight, didn't take that buy side. Now we're coming back down. We don't have no displacement yet on the hourly time frame. So nothing on the hourly time frame as far as displacement, which way it want to go. All right. On the 15-minute, we ain't got no imbalances on the 15-minute yet. Came really close to that high. Did not take it. All right. On the 5-minute, coming down. If we take out this low right there, we take out that low right there, this 1 hour fair value gap combined with that 5-hour fair value gap right there might be a good short. Now, the only thing that I don't like about it is the 5-minute is the only one that's giving me some kind of indication of this is what I really want to do. That's the only thing I don't like about it, because the hour not giving me that. The hour come back and the hour is testing that midnight, right? Came really close. When price come really close to that right there, it came closer to that high than it did that low. So be careful. It might want that high. But because the 15-minute needs to come all the way, well, the 15-minute can get a break and structure there in the same place as the 5. But the 15 won't have a imbalance yet. The 5, if the 5 come down and take out that, the 5 will have an imbalance right here at this balanced price range, offsetting PD arrays. That's why I say this look good. So coming back to this fair value gap right there, the low of that hourly fair value gap we've repriced, and this, first touch of this right there at this down close candle right here coming in, that'll be a breaker. That'll be a breaker. But like I say, the only thing I don't like about it is the 5-minute is the only one that's giving me that right now. But, and another thing I don't like about it, but no, we didn't. That was before 7:30, right? We did that in the dead zone, right? It was before 7:30. I was gonna say took out the London low. If we'll take out the London low like at 7:30 and the what's the name? All right, that low been hit. All right, that low been hit there. Yes, the low has been taken right there. Now watch all of this play out before my time I trade. Watch all this play out before my time I trade. Now, back to the topic. How to avoid FOMO. Let's go over here for the note takers. Note takers. How to avoid FOMO. How to avoid FOMO. It's real simple. It is real simple. Understand higher time frame, order flow, have a clear bias, have a rule-based entry model. Right? Is that right? Did I spell model right? That's how you avoid FOMO, right? This is how you avoid FOMO. Tim, that sounds real good when you say it. I don't know why I put that in two different things. I don't know why I put that in two different things. That's how you avoid FOMO. Tim, it sounds real good when you say it. It sounds real good when you say it, Tim, but what do you mean? Me no sprechen Sie dat. Me no sprechen Sie Deutsch. All right. Let's go back here to the monthly. All right. I told y'all this was sponsored by Michelle Tucker. Right. This was sponsored by Michelle Tucker. Right. So last night we talked about, we were saying we were expecting price on the monthly to take out that May low. Right. We're expecting price on the monthly to take out that May low right there. Sell side. We expect the price to take out that May low. And then we were also expecting price to respect this bullish order block. We want to see it bullish order block open. We want to see price close above that bullish order block on the monthly. Right? So what is this? What is this a part of? This is a part of higher time frame order flow. This was a part of higher time frame order flow. We want to see what is the order flow on the higher time frame. Are we respecting discount PD arrays? Are we disrespecting discount PD arrays? Are we respecting premium? What state is the higher time order flow? Boom. Now, let's go down to a weekly. Right? So this, let's go back to the monthly. This is a monthly liquidity. This is monthly PD array. So anytime you're looking at a PD array, whatever time frame that PD array was made on, you want to see what the time frame, that time frame candles do. Right? That's understanding the order flow. So this is a monthly order block that we want to see the monthly candle close above. This is monthly liquidity. We want to see this be taken with a monthly candle and see if we reject off of it or if we press through it. Go to the weekly, right? So on this weekly candle right here, you see we come down and we take out. Now this is weekly liquidity we watching, but it's also what? Monthly. This is a weekly swing low, but this is also a monthly swing low. keeping in mind what the higher time frame is doing. We take out this weekly and monthly liquidity on this weekly candle, and we close below the order block, right? We close below the order block open on the weekly. Remember, the monthly is not closed yet, right? On the weekly, this is the week of 23 October. Look at your calendar. 23 October is the 23rd, 4th, 5th, 6th, 7th, right? That's what this week is. So on the 27th, right, we closed below this order block open on the weekly. We care not that the weekly candle closed below this, because this is a monthly order block. What we care about on the weekly candle is that this weekly candle closed above this weekly low. That's the only thing we care about on the weekly. This weekly candle closed above this weekly low. That is a good indication that the weekly is in line with the monthly. Why? Because we want to see the monthly respect discount PD arrays. If the monthly dips below a monthly low, right, it is going to pop back up quick. That's what we want to see. That's what we want to see. Now, we want to see the same thing on the weekly. We want to see the weekly respecting discount PD arrays. Back to the weekly. It's respecting the discount PD array. But Tim, it closed below. It's a weekly candle. The lower time frames can do whatever it wants to do in relations to that PD array. We want to see what that time frame candle does, right? So now, on 31 October, we want to see if, on 1 November, we want to see if the October candle has closed above this level that we've been watching, right? Since this week here entails 30, 31 October, then 1, 2, 3 from November, right? We got to go down to the daily chart to see what happened. 30 October, 31 October. Where did it close? Above that monthly order block. The monthly is respecting the discount PD arrays. The weekly is respecting the discount PD arrays. So the monthly and the weekly order flow is still bearish, right? Because bullish. I'm sorry. It's still bullish. Because remember when we said the monthly had broken bullish. It got a bullish breaking market structure when we were going up here. We got institutional sponsorship. How? We got consolidation, expansion with displacement. Once we got here above this rejection block, we said the monthly was in a bullish retracement. A bullish retracement just means it's going down. It's bearish in the short term. But when we get to the discount PD arrays, we anticipate price to react bullishly. Boop, it's doing that. The order flow is still bullish. Yes, it's coming down. This is just a retracement. It's just retracement. A bullish retracement is bearish activity. Get to the discount PD arrays and it's acting bullish, right? Understanding the order flow. Understand higher time frame order flow, right? Now, we already talked about the monthly and the weekly, right? Now, what else we said? Have a clear bias, right? Have a clear bias. The monthly is reacting bullish. What above price, what PD array above price on the monthly is there to draw to? There's nothing but that high. There's no order block. There's no fair value gap. There's nothing. Just that high. That's the only PD array on the monthly to draw to. On the weekly, because we're respecting the low, so the order flow is bullish. That's why we're looking for draws above. Right here we go. Right here, we're here now on the weekly. What do we have to draw to? We have an imbalance here. We got a SIBI there. Right, we have a SIBI there. We have, if you're into mitigation blocks, you got a mitigation block there. If you're into that, we have a order block here. These two candles is the order block, but this is the last candle. So these two is the official order block, but this is the last up close candle there. So we have a bearish order block there that can draw price up. Right. So that's, and then you have a couple highs. You have this. You have this high there as a draw. You have that high. You got a couple highs. It's a few things above price that you can use as draws. But what I like to do, I like to use imbalances. Right. So we have one clear imbalance above price. Right. We've come down. We're showing respect for the PD arrays. So we do not anticipate this low to be revisited. Right. We don't anticipate that low to be revisited. Why? Because all of this over here, we're looking at it as a balanced price range because prices come down on the higher time frame, showing respect to the discount PD arrays, on the weekly showing respect to the discount PD arrays. And now the weekly has an imbalance above us that can draw price up to it. Right. So we're looking for price to hit this high first at 44.30. If we're looking for price to hit that high first on the weekly at 44.30, we have a humongous week that we just got out of, right? Keep that in mind. Now, on the daily, as we got this huge week up, right? We got a break in market structure here on the daily, right? A bullish break in market structure on the daily. I don't have a break in market structure thing. Right, we got a bullish break in market structure on the daily. Okay, so that's our bullish break in market structure. Let me put this in the center, make that big. All right, so we got a bullish break in market structure on the daily. We got institutional sponsorship. We got a breaker right there, the bullish break in market structure that gives us our bullish breaker. Right now, we got our bias. We understand higher time frame order flow. Right, we got our bias. The draw is here. The first draw is there. The monthly draw is way up there somewhere. Right? Take months for the monthly to play out. It took us 3 months to fall all the way down here. It can take us another 3 to 6 months to get back up there. Price fall faster than it rises. Right? It might take you 6 months to get back up there. Right? So if you got a bullish bias, right? What does your rule say about entering? Right? If you use ICT concepts, we always buy in, buy at a discount. We always buy at a discount. No matter what your rules say for entering, you always want to buy at a discount and sell at a premium. Sell at a premium. if you're using ICT concepts, you always buy at a discount and sell at a premium, right? So now we got institutional sponsorship. Why? Because we got expansion with displacement. What does displacement look like? Imbalances in that price leg. That's your displacement. Institutional sponsorship is involved. When institutional sponsorship get involved, they leave reference points that should protect the implied move. What's the implied move? Getting all the way back up here to this high on the monthly time frame. On the daily level, what has been put in place to protect this? A bullish order block has been put in place. A bullish breaker has been put in place, right? A bullish order block in the form of these 3 down close candles. The strongest one being the last down close, but this full thing is a bullish order block. That candle from the 24th, that's a bullish breaker. Made a low, high, lower low, higher high. Bullish breaker right there, right? So it's got reference points to let it know, hey, if we start pulling back, you supposed to protect this implied move of going up, right? Always buy in a discount, selling a premium. What's the discount and premium, Tim? You go from the low of your price leg to the high of your price leg. Anything above 50% is a premium. Anything below 50% is a discount, right? Anything above premium, below is a discount. So if this breaker and this order block is supposed to protect this move, right? If the breaker is stronger than the order block, how do you know if the breaker is stronger than the order block? Because on the PDub chart, the breaker comes before the order block in the order of importance. So if the breaker is stronger than the order block, right, you want to at least see the breaker get to equilibrium, right? So if we put it at that high, now the breaker is right at equilibrium in a slight discount at the open of that breaker. So if you see price start to run, come here, run, you want to see that. You are going to avoid FOMO because you understand the higher time frame order flow. My cereal, mad soggy. I can't even finish eating it now. You're going to understand the higher time frame order flow. You want to see this, right? You don't have an opportunity to enter yet because why? We are in an extreme premium. What do? We sell in premiums and buy in discounts. The order flow is bullish right now. So we're looking for reasons to buy because the order flow is bullish. If you're highly advanced and you want to trade against the grain, you're more than welcome to sell in a premium and sell back down to a discount. Whatever blows your skirt up, whatever floats your boat, do that. But if order flow is bullish, the safe thing to do is to look for reasons to buy. Now, if price starts to pull back without getting to a point, right? So taking out this high, right? Without taking out that high, let's put it a little bit above. Let's go right here to this daily fair value gap right there. That's inside this weekly. We're gonna put it on that high right there, right? So that price is, I just scoot it over like this. I'll scoot it over like this right here. Put it over there so it makes sense in my mind for it to be leaning the right way. Yeah, there you go. Now, there you go. Now we get up into that weekly imbalance, give us a weekly break in market structure. Now, the breaker, right? This daily breaker is now at equilibrium of this price leg and in a discount, right? So if price wants to come all the way back down to that breaker, it'll be in a discount. that would be a nice buying opportunity to buy off of a daily time frame to go up with price. So you're not, the last week that took off, you're not FOMOing into that because you're understanding the order flow that you need price to move away, right? You need price to break market structure to show you that I'm ready to go in that direction. So you need these rallies. And then when it rallies, you look for your opportunity on the retracement to get in. And that's where your rule-based entry come in. What is your rule-based entry? Do you trade a retracement back to a fair value gap? Do you trade a retracement back to a breaker? Do you trade a retracement back to an order block? Whatever your rule-based entry is, that's when you start looking for your rule-based entry. Now that price has done this on the monthly, this on the weekly, this on the daily, right? If you enter on the daily, what rule-based entry do you need right here? Because right here, it's just been running up. And you don't want to get FOMO. You want to avoid FOMO by understanding what the higher time frame is doing, what the higher time frame is telling us. And then once it plays out, boom. And that's just, I'm just doing it for like a daily time frame. You do the same thing for the intraday time frames. The same thing for the intraday time frames based off this daily candle. What is the 4 hour doing? What is the 1 hour doing? And then you make your entry decision based off the 15 minute. Or what is the daily doing? What is the 4 hour doing? What is the 1 hour doing? And then what is the 15 minute doing? And then you make your entry based off the 5 minute. Same thing. Prices. Even if this was a 15-second chart, what is the daily doing? What is the 4 hour doing? What is the 1 hour doing? What is the 15 minute doing? What is the 5 minute doing? What is the 1 minute doing? What is the 30-second doing? And you make your entry off the 15-second chart. Prices. Just like we looked at the monthly and said, okay, we need to wait for all this monthly, all these days and weeks we waiting for this right here to transpire. Right? Let's just say 30 days for even. 30, 60, 90 days for this to transpire right here. Right? 90 days for this to transpire. And then here we go working on another 30. And then we're probably going to be working on another 30, 60, 90, 120, 150 days before we get an entry off of the monthly. Down, up, retrace back, go. 150 days before we get an entry, right? But if these are hourly candles and all this is inside of daily, and these hourly candles, 1, 2, 3, 4, 5 hours, you know what I'm saying? 1, 2, 3, 4, 5 hours before you enter. If these was minute candles, 1, 2, 3, 4, 5 minutes before you enter. If these were second candles, 30, 60, 90, 120, 150 seconds, 60, 120, 2.5 minutes, 2.5 minutes before you enter. If these was 30-second candles, 30, 60, that's 1 minute, 90, 120, that's 2 minutes, 30, 2.5 minutes before you enter. Price is price. You avoid FOMO by understanding higher time frame order flow, having a clear bias, and having a rule-based entry model. And then if you trade in ICT concepts or any concept, buy at a discount and sell at a premium. I yield my time. Does anyone have anything else? I can't eat this. That's horrible. That's horrible. Does anybody have anything for me? Does anybody have anything for me? It's 10:05. It's time for me to start seriously watching the market to see if I can get a trade. Does anybody have anything for me before I go? Hello? Can you hear me? Is there anybody there? Oh, Lord, when did this guy come in? When did this guy come in? At 9:46? Oh, that was like 30 minutes ago, 15, 20 minutes ago. Add more cereal. Man, that thing's so soggy. I don't know. I might be able to. What's up, Taryn? What's going on, Taryn? All hearts and mind clear? Ain't nobody got nothing? Ain't nobody got nothing? Anybody got any questions, concerns, comments, feedback? Questions, concern, comment, feedback. Anything, nothing. All right. We gonna get ready to call it. We're gonna get ready to call it. I was just marking out the opening range. We're above the opening range gap right now. We've taken out the yesterday afternoon buy side from the regular trading hours right there. We've taken yesterday afternoon buy side from the regular trading hours, and as of now, we're rejecting off of it, but we got 15 minutes left in this candle. 15 minutes left in this candle. Taking the yesterday afternoon buy side. And that's that right there. That high right there. When we go into the regular trading hours, this is something that I learned from ICT also. When we first open up, I got this from, I think it was the video One Setup for Life, might have been. But when we first open up, I switch it over to regular trading hours, and I look for the sell side and the buy side that has not been touched from the day prior. Right. So we took out, we came down on the opening candle and took out the sell side from yesterday, coming down into this imbalance. That sell side, that last afternoon sell side, took it out. Then we went back up and took out the buy side. Right. Sell side to buy side. Right there. But we did all that within, you know what I'm saying? And then going into the 950 to 1010 macro is when we finished it off to take out the buy side. So the macro attacked the buy side today. I think it attacked the sell side yesterday, but it attacked the buy side today. But I like to do that to folks see which, you know what I'm saying, which liquidity the market is going to attack when it first opened up. And then I'll go back to electronic trading hours. See right here, this is why I was like, I don't like the fact that the 5 minute was the only one showing it, because see how we came down right here and took out this low and then pushed back up, right? Because coming in here, at 9:30. This was the 9:30. Yeah, this was the 9:30 candle right here. Yes. Yes, that's the 9:30 candle. Hold on, let me see something. So, all right, that's the 9:30. Okay, so got that, and then okay, yeah, I got my lines in the wrong spot. Got to adjust my lines. I got my lines in the wrong spot. I'm like, wait a minute, this ain't right. So that's my 410, and that's my 9:30 right there. Okay, so that's the gap right there. All right, so that's 9:30. That I had put it at the close last time. Okay, I messed up. I put it at the close last time instead of the open. I'm tripping. All right, so now that's the opening range gap right there. There you go. That's the opening range gap. So all right, so we've come up, taking out that buy side. We got displacement up there. Okay, unless it's gonna be a chop suey day. Right there, go to 15 minute. Yep, we still ain't got no displacement on nothing. 5 minute, the only thing that's giving anything right now. I still don't like it. I don't like it when the lower time frame is the only time frame that's giving a displacement. I don't like it. I mean, you can get in and do what you want, but me personally, I don't like it when it's the 5 minute is the only one giving the displacement. I don't like it. I don't like it when the 5 minute the only one giving the displacement. And then like I said before, we had come closer to this buy side than the sell side. Whenever I said it, but we pushing into the buy side more. When when we first came on, I can't remember exactly where the candles were, but I was like, hey, we came closer to this buy side than this sell side. Whenever we get really, really close like that, I just look at them as engineering more liquidity above it to attack later. And we've attacked now. But again, this just on the 5 minute. So I don't like that. It ain't giving me nothing that I like. Right. We came down to this imbalance right there. And we're pushing back up on the hourly. Right. Came down to this imbalance and we're pushing back up. Why do I have this marked as 1 hour fair value gap? Oh, that's what I'm like, man, why my thing looking crazy? Why y'all tell me I was still in regular trading hours? Okay, there you go. Now that's making sense. There you go. That was I said we came closer to that buy side than we had came to this sell side. So that's just engineering more liquidity up here. And then we went on ahead and took that out. See what I'm saying? We did sell side. We did come close, but that buy side, we had come right up to it and stopped. So engineer more liquidity, got up there and got them. Bye, y'all. At the 10 o'clock, at 9:50 to 10:10 macro. Boom. Went up there and took them out. Nice tip when you extend the field to hit the break at 50%. Okay. Michelle, you sponsored today's episode. You sponsored today's episode of how to avoid FOMO. When you pulled up with the hard-hitting questions last night and you were about to get FOMO and your entry setup had not even come. So we walked through how to avoid FOMO and we laid out the rules of understanding how your time frame order flow having a clear bias and having a rule-based entry model. Seeing how to use the time frames was great. You're welcome. You're welcome. Yes, Michelle is the class president. Y'all know what? Speaking of class president, I just made a decision. Right? I just made a decision. Let me look at my calendar. IG. I'm fun to hang up on y'all IG if anybody on here. Come to YouTube if you on IG. Let me look at my calendar. I just made a decision. Okay. Got a doctor's appointment. Nope, they canceled that. I can take that off. I can take that off. Going to see. Okay, that's the holiday. Y'all hearing it here first. You're hearing it here first. I will be doing, and this is my last effort. This is my last effort of teaching. I will be having, let me see, how do people be saying it? How they be announcing they events on social media? Hey everyone, this is Timothy Rogers from Tim's Tidbits, and I'm announcing my 5-day tape reading with Timmy course brought to you on November the 13th through 17th, every morning from 9:30 to 10:30. We're going to sit down and read price action daily and talk about all the concepts and things you need to think about every day while trading price action. And it's all going to be brought to you for the low price of free 99. We're going to do it for free 99. That's right. Save up your money and come in and hang out with us on November 13th, 14th, 15th, 16th, and 17th from 9:30 a.m. Eastern Standard Time to 10:30 a.m. Eastern Standard Time for a 5-day workshop brought to you by I Am Little Hawk. Brought to you by I Am Little Hawk. And the crowd goes crazy. Have you ever seen a crowd go? That's right. Tap in to youtube.com/the-new-TLR on November 13th through 17th from 9:30 a.m. to 10:30 a.m. every day. And we're going to go over price reading in real time and talk about all the things that we talked about today as far as understanding higher time frame order flow. But this will not be a call out service, so we will not be talking about entering anything. We're just going to read the candles and see what price is telling us. The end. I think. How did I do? Good. All right. Hey man, y'all pull up. We having a 5-day workshop. 5-day workshop brought to you on a discount. A discount. It only going to cost you free 99. Free 99. You can learn all the PD arrays that you want to. But if you do not understand how to anticipate, or if you don't understand how to listen to the candles, you can learn every freaking PD array that you want. Got to listen to the candles. Listen to the candles. So that's what we're doing. I just thought, what is this talking about? Do you want to continue allowing live activities? Why does it keep asking me this? My phone keep asking me something about allowing live activities from Instagram. These apps get on my nerve. These apps get on my last nerve. Good morning, mother. Good morning, madre. Mi madre. Good morning to you. That's all I got, man. I appreciate y'all for hanging out, but that's real talk. Real talk. Next week, we're gonna spend the whole week reading price. We ain't gonna be calling out no levels. We ain't gonna be saying, hey, this is what I'm trying to do. We ain't, from 9:30 to 10:30 every day next week, we're gonna read price for an hour. Because that's the piece that took me the longest to develop. So I want to focus on that. And for the channel members, we will be doing the tape reading with Timmy on Mondays. We're gonna be doing that on Mondays until I get sick of it and quit again. Everybody else, tape reading with Timmy, 1 hour from 9:30 to 10:30 all next week, the 13th through the 17th. I appreciate y'all. Till the next time I decide to get on Al Gore's internet, y'all be safe out in these trading streets. It's your boy, Aranya Grande, aka Big Spider. Gone.